looked at, in the previous segment, sorry, we looked at business overhead expense insurance and loan disability insurance. So we're continuing now with disability buyout insurance. What this insurance is you can create a buy-sell agreement. So the agreement will be created by a lawyer, and it will be between the existing owner and the potential buyer. And with this, you usually have a lump sum tax-free benefit that's paid. So for example, it's an agreement where there's a guaranteed buyer and a guaranteed seller. So if there are, let's say, partners in a company, and they get buy-sell agreement on each other for disability, they're saying that if one of the partners has a disability and is unable to work, the other partner will be buying out their shares, right? So, and the partner will get a lump sum benefit, so they will get some money too, as a way that they've sold their shares, and the next partner will be a sole owner, right? So that's how that is meant to work. The elimination period for this is usually 12 to 36 months. And why it's long, so that's between 1 to 3 years, because they want to make sure it's not something small. If the person is selling out their part in the business, they want to make sure that it is something severe, right? So that's why they have made the elimination period for 12 to 36 months. Because if it's a disability that they can recover from in 2 months, 3 months, 6 months, or under a year, they don't want them to sell out their portion, right? So the elimination period is left longer. That way it will eliminate maybe those short-term needs that don't need for the partner to actually sell out their share. And the last business plan that we're going to be talking about today is called Key Person Disability Insurance. These are short because there's not a lot. I'm just giving you the overview gist of what these plans are. And if you always want more details, you can always look at the book. So just a brief overview of what they are. So you're familiar with it. That is the idea. So the book is so huge. If we were to go into detail for everything, these segments would be very, very long. So we want to understand each concept. And then if you need more details, you always have the book to refer to as well. Okay. So the next one is Key Person Disability Insurance, the last one that we're going to be looking at for business disability products. And the great thing about these, again, is that the next module overlaps a lot with this module. So the riders some of them are exactly the same, their meanings, when we look at life insurance in the next module. And even for business life insurance, just like there are products for business accident and sickness, there are products for business life insurance. So those products also overlap a lot with these products. So that's a good thing, is that you get that review. All right, so Key Person Disability Insurance. Now, all of the products we have looked at so far are for people who are part of the business, right? So those are plans that are for the shareholders of the business, the owners, the co-owners. But what if you have someone who's not an owner, but is very important to the business, right? And I'll give you an example. So this plan is for that. If you have a very important employee, so they're not a shareholder, but they're very important, they're a key person. So let's say you own a restaurant and it's a very successful restaurant, but it's only successful because one of your chefs, let's say Mike, your head chef, is a great chef, and the customers come in because of his cooking and because of his food. So even though the restaurant is great, but you know that you would not have the customers and you would not have the profits you do if it wasn't for Mike. So Mike is not a co-owner, he's not a shareholder in your restaurant, but he's very important to your restaurant. So he's a key person. So if Mike was to become disabled and didn't come to work for 4 months, your business would have a huge loss, right? So this is where Key Person Disability Insurance comes in handy, because they can try to protect themselves against that potential loss. And the same idea will apply to Key Person Life Insurance, which we'll look at in the next module. But I do just want to create those little bridges so you guys have the idea and it makes the connections, right? Because at the end of the day, all the modules are connected, and we want to look at those connections as well. All right, so this is again for an important employee, and the company is just trying to protect itself. That in case if Mike doesn't come to work for 6 months, we know that there's going to be a loss. So by getting Key Person Disability Insurance on Mike, the company will get a benefit to offset that loss. So we can't stop the loss from happening, because if the customers like Mike's Food and they're there because of him. So you know you might lose half the profit for those 6 months because of Mike. So if you get a plan that gives you that money as a benefit, so you're kind of protecting that company, right? So that's the idea. What's important here is the business should be the payer. So that BUS, or it stands for business, should be the payer and it should be the beneficiary. So you should not tell Mike, go get a plan on yourself and make me the beneficiary. No, because it's a business decision, it's a business purchase. You should have the company, whatever corporation or whatever your business is, that should be the one who should be purchasing that plan on Mike, and that should be the beneficiary. So that way, Mike doesn't have to worry about any payments because he has nothing to do with anything, right? It's the company who needs him, and it's the company who's trying to protect themselves itself. So they're the ones who should be getting that plan and should be the beneficiary to help offset that potential loss that might happen if Mike is disabled. All right, so those are our different business plans. And whenever there's a question about a business for your exam as well, you always want to consider business plans. We want to avoid using individual disability plans for business solutions because we want to look at business plans. Sometimes you can combine them, like for example, if you have business overhead expense insurance, you may need to combine it with an individual disability plan because the owner may need their own coverage and then the business may need its own coverage, right? But we always want to look for those plans. All right, perfect. So we'll finish off here, and in the next segment now we'll be looking at some of the government plans. So this is it for business plans, and we'll catch on in the next segment.